So on this particular subject of time analysis. So this is the second event. One event we have conducted last month also, and on that event also you have seen couple of stocks, that 5 stocks and 2 indices we have taken, and we have forecasted some dates of trend change. So that also you have seen it. And before I should start the session, there is a small announcement here. We are having a paid seminar at Chennai and also the online event. Chennai, it is on 16th September and the online event on the 20th, 21st and 22nd September. And this 3 online event is going to be conducted late evening, 8 p.m. to 9 p.m. And this is the offline event on the 16th September. And very few seats are remaining now. And if you are interested, do register for this event, and any detail about this event on your registrations and other things you can call to these particular numbers. So our sales numbers are being given, and all of you will be given one trend analysis, time analysis app, Gann app. Those who are joining this particular event, they will be getting that app free. So that app we will be giving there, and this time this particular event will be more focused on the Gann's time analysis, and we will also cover some of the options, key concepts, key strategies beneficial for getting consistent return, and some of the price trend analysis also. So this is the, and we too also have another offer wherein if you are buying the full package, you can participate in that program free of cost. So this is also another offer is there. So if you are interested, you can call to those sales number. So this is about that particular seminar. And last month we have conducted one event, and we have given you the timing calculations for these 5 counters: Reliance, HDFC Bank, Sun Pharma, TCS, Tata Steel, Nifty and Bank Nifty. All these dates is being calculated on that particular event and being conveyed to you. So you can, many of you would have cross verified it. So I'll just take one analysis. So since I have to conduct the today's event, every script I cannot take and analyze. One particular script I am just taking for the Bank Nifty. So August 1st to 30th August, these are the pricings of Bank Nifty spot segment. Bank Nifty opened high, low and closed from the 1st August to 30th August. On that particular event for Bank Nifty, which are the days we have calculated? 1st August, 12th August, 30th August and 27th August. These 4 days in the month of August we have calculated, which has the probability of a trend change as per this particular principle, which is price range and time in the current trend. This is the method. So whether it has happened or not, so that is very important. Simply by learning one concept is not giving you that yes, it will, so much of mathematics I will do, and if it doesn't work, what is the use of learning that? So let me go through at least one and show you what has happened. 1st August, so I just highlighted the days what we have calculated, and as I told you, the day which is not a working day, not a trading day, the preceding and succeeding days will be considered for that particular date. Suppose if I am taking here the 12th August is not a working day, not a trading day. So the 11th and or before that or after that, 13th also I can consider. So for that I have just highlighted here 10th. So 11th, 12th was holiday, 13th also I have given. So I have just taken 2 parameters here. One is the difference between the high and low. Based on the previous day close, how many points it has moved. So 2nd August to 1st August, how many points of movement it has triggered. So 1st August, what was the price and what was the price on the 2nd August. So how many points of movement it has given. So that I have figured it out. So if you just look into the 27th August, you have the highest price of in that particular month of August. Whatever the pricings it has given, number of price points changed on closing basis. 27th August was the highest. And if you just look into this 2nd August, 2nd August you are down by 240 points. 1st August, if you take the July data, you can get how many points you are down. And immediately after the 2nd August, the trend is changing. You are going to the uptrend cycle. 2nd August is one of your calculated trend change date. I'll again take you to here. 1st August. 1st August is one of your trend change date. And you are experiencing here the 2nd August, you are down by 240 points. 1st August data also you can take it and you can cross verify. 27th August is also one of your calculated date, and that particular date you are getting the maximum oscillation, the maximum gain in Bank Nifty came in the month of August, that is on the 27th August. So same way, if you just go for that 28th August, you have made the monthly high. This is the monthly high happened in the 28th August. Just one day preceding to that, 27th August you made a high, and 28th August some amount of movement and you have made the monthly high. And but effective price change was just a neutral, no changes as compared to the 27th August. And again another one price point you have calculated, the date what you have calculated, which is 30th August. And 30th August, let us see whether any trend change happened or not. So 30th August also you can see. So 27th August monthly highest price movement, 28th August almost consolidation, but that particular day monthly high also happened. 29th August slightly trend change, and 30th August you are drifting below. Just 120 points of movement in the downside you have expected. So these are the price points. As I used to say, this timing analysis, what you have done as per this particular method, as per my experience, it gives you some 60 to 70% of accuracy. Cross check with all these days for the August what we have calculated by taking the July data. Cross check with all these dates. So we have taken for all these counters Reliance, we have taken HDFC Bank, Sun Pharma, TCS, Tata Steel, Nifty and Bank Nifty. These are the dates, and the video also available in the YouTube channel. Cross check it and then accept this method. So blindly accepting any method is not a good idea in the stock market trading context. You must know how that calculation has happened. You must know whether that calculation works or not. These two parameters will tell you whether to accept that method or not. So I have just demonstrated what happened, what are the days we have calculated for Bank Nifty, what happened. And similar things you can get in the Nifty also. Other things you can cross verify from your end and derive the conclusion how many percentage this particular method is successful. So coming to this particular method, we will be starting the session now. So here what we are doing. So as I told you, and on based on this, there is a how to calculate, how to convert the numbers to degrees. So we have a YouTube video, both in the English and Hindi, it is available. And multiple times we have emailed to the registered members of our website. And I'll just show you the locations of that particular video. So this particular 4 weeks before the same concept, we have taken a webinar, that recording also available. And this is the video predicting the future high and low timings using the WD Gann's method. 1 month before it is being released, and its Hindi version also I have released just after a day or two. So now, so detail about that formulas and other things I will not be going through. Just there are two formulas here. we are using only two formulas. One is converting a number to degree. Why it is essential? Because time and degree are having a very close relationship. So numbers having the same degree. So if you take one trend line and say this particular trend line is 45 degree, so it has many numbers. Suppose here one number comes, its value is different. Here another number comes, its value is different. So every place you get a new number, though its value is different, but all these numbers falling on the 45-degree trend line. So that is being done by the second formula. So here that price and the time relationship, W.D. Gann has given a very fantastic relationship of the price and time. So he said the price is square of the time. Times square is known as the price. This is the original formula. So whenever we convert the price to a degree, what we have to do? Just we have to take the square root of the price, multiply it with 180, and we have to subtract it. So sorry. So here we have to take the modulus function, price to degree, whenever we are converting. So we will be taking the modulus function, square root of this thing, multiplied with 180, subtract 225, and then you have to divide it by 360 and take the remainder. Take the remainder, so which will convert the number to a degree. Then we have another formula, number of numbers having in the same degree line, that too also having a formula. So I'll just directly show this formula. So it's a very small arithmetic formula. You yourself can able to do it. So here is the formula for converting the price to a degree. So I am taking the price, what is the high and low difference, multiply with the 280, subtracting 225, assuming 225 trading days in a year, and I am dividing it by 360. So this is the mod will give me the remainder function. How much remainder is there? So that is my degree equivalent of that particular number. Then I am just converting that particular number. So out after this degree conversions, I'll be putting some logic. But the second formula what I am using, this is the first number which is falling in the 7-degree trend line. Here I am accepting the 7-degree trend line. So the 7-degree trend line what I am accepting, the first number which is falling on this 7-degree trend line will be calculated 2 into n. So n is the number 1. So first trend line added with 2 into the degree divided by 365, and I am just adding 1.25 as a constant and taking a square of that. So just to round it off, I am just saying that you just give me a whole number. I don't want in the decimal format. So that's why I'm using this round function in the Excel. So the second number will be, so 2 into 2 and remaining things will remain same. The third number in this particular trend line will be 2 into 3 and all remaining things will remain same. So by this process, I am just calculating the numbers in the same degree line. So this is the formula for two formulas we are using. Now come to the condition part. What we are doing here in this particular method. So first we are taking the high, when it has happened, low, when it has happened, which date it has happened. So between the high and low, how many price points are there? What is the difference between the high and the low? That we are taking. So this part it is giving you high and low. Difference is 163 rupees. So this 163, I am converting it to degree. Then between these high and low formations, how many trading days and how many calendar days are there? So trading days, if I take 18 trading days, and if I am taking calendar days, it is 28 calendar days. So this 28 I am converting to degree. This 18 also I am converting to degree. So all the three things is now converted to degree. The price range what I have got, that I have converted. The calendar days I have converted. The trading days also I have converted. After this conversions of degrees, the difficult way is to establish some relationship of squaring, relationship of offsets and other things as per the Gann's studies. But to make it very simple, we are just taking the smallest degree. One we have got 273, another we have got 179, the third we got the 70. So the smallest degree we are just choosing for our calculation. After taking this 7 as 7 degree, we are just finding three numbers which is falling under 7-degree trend line. This is the trend line. 7-degree trend line, three numbers we are finding out which is falling on the 7-degree trend line. The first number we are getting 11, second as 28, and the third number what we are getting is 53. So this is the three numbers we are getting. So after getting these three numbers, our date prediction will start. Just to from in 2nd August, we will be adding this 11 days, 28 days and 53 days. We are getting 9th September, 26th September, 21st October. Same way we will be taking 29th August, add it and get some date. So here we are adding with the 29th August. The first row we are adding with the 29th August. Second row we are adding with the 2nd August. So we got these 6 days. Out of these 6 days, the 3 days are falling on the month of September, and August 2 days are already gone. These 2 days has already fallen in the August and it is gone past, and one is in the October. So for the September, these 3 days are important for us. 9th September, 24th September and 26th September. And you need to just remember one rule. If any of these days are a holiday, trading holiday, or falls in a Saturday or Sunday, the preceding day, the previous day, previous working day, or the succeeding day, the next working day, will act as a trend change date. This is the simple method. So based on that, Reliance I have calculated, HDFC I have calculated, same set of stock I have taken. Sun Pharma I have taken, TCS I have taken, Tata Steel I have taken, Nifty also I have taken, and Bank Nifty also has taken. So keep a note of all these dates, or you can just take a screenshot and save it also. So these are the days we are expecting the trend change to happen. The trend change to happen on these dates. Now question is whether that trend change what is going to happen, it will be in the positive direction or the negative direction. Whether the trend change we are expecting, yes, 9th there will be a trend change in the Reliance. Again it will be succeeding with the 24th. Again it will be succeeding with the 26th. So what kind of price movement we can get it there? So for that we need to do the price trend analysis. This timing part is entirely independent. We have done it. We got the dates. So now the pricing part is very important. So pricing part, either you can use the one standard deviation concept. You can use the same Gann concept also. So same Gann concept also you can able to use. Say you can say Gann's price to price squaring method if you are using. Then you have to use the static angles 45, 90, then you have to go 135, then you have to go 180 and 225 and 360. So you need to calculate the resistances in these angles. So for the calculating the resistances, you need to take the square root of low. What is the monthly low it has given? So square root of low Then you need to add with the degree factor. So this is the degree. You have to divide it by 180. So you will get the degree factor. So entire result, whatever the you are getting. So whatever you are getting the entire result, you have to just take a square. Take a square. So 1183 it is coming to the next resistance. So as long as it maintains above 1183 you are safe, and it has all probability to go till what level? Till 360 level. So 360 level, so same way you can just calculate. However, you have to just change the parameter here. It may be shifting to different levels. So here it is I am using the D2. So just I will change this parameter. So 1200 is another resistance, and this same resistance can act as a support if that price is crossed. So here also another, and third I am just taking here. Here too also I am taking one more. Here too also I have taken one. So this is the levels. So once this particular price moved up, then you can expect these things. If the price is fallen below this, then subsequent levels will act as a support. So the trend change date, once you identify, so before that, you may take a reference from a previous month's high or low. You may take the reference from the current price also. So from current price, you can add the 45-degree resistance. You can find out 45-degree support. You can find out. Then you just see if it is going above the support level, above the resistance level, then you may expect the trend change on this particular day may be positive, and it may go to the 90-degree or 135-degree or 180. So there are many ways you can do the price trend analysis. However, the time analysis used to be the most difficult analysis. And thus I have simplified. It is one of the method available in the WD Gann's concept, by mean of which you can able to do this kind of time analysis. And where the tool what we are going to come with, it has many other features also. We have just added five different features in that particular tool. So different Gann principles are being given here. So here we have taken from the way you have seen the lowest angle, we have also taken from the highest angle. Then we have taken the static angle, we have taken the Gann's angle, and high and low squaring method also we have taken. There is a high and low squaring method, and we have just one Fibonacci method also we have put it. So based on that, which are the trend change dates, and all trend change dates are not important. Here it is given which are the trend change dates are having the higher priority, and which are the trend changes dates are having the lowest priority. Like the trend change dates calculated using the static angle, Gann angle, are the low priority trend change dates. On those days, maybe one consolidation may happen, or there will be a small correction may be there. Price correction will be there. However, the low angle, which you have just seen, the lowest angle, same way for the highest angle, and same way for the high-low squaring action. These three concepts, you can able to see the trend change will be a major trend change. So there will be a good amount of correction or a good amount of rally may happen on that particular days. So these are also explanations we have given. So this is the tool the traders are going to get. Those who are joining this particular program, they are going to get this particular tool. And we have taken two reference. One is the previous month. Another also we have taken trailing 1 month. Trailing 1 month from today to backward some 30 days, how it has been given. So that also we have taken. So two reference points we have taken. Along with that, we have just added few more concepts here. So few more concepts we have added here, like Gann square of 9, Gann square of 12. All these things also is being added here. So that also I can show you here. So the Gann angle and volatility also is being added here. So Gann angle and volatility also is being added here. So these three concepts are being added here, so that you can also do some price trend analysis. Gann square of 9, 12 and GAV. These three things is being added here. So and so here measure trend change, the new high, new low, or a complete trend reversal is expected when the minor trend change, small trade price corrections or consolidation may expected. So on these days, so this tool will be getting on that seminar participants will be given initially. Then after, so we need to decide that what are the training requirements the trader should have and who can get these things. That will be decided after. But currently this is being enabled that this particular tool is going to be released and it is to be given to the seminar participants. So what is the minor trend change and all these things is also given here. So Gann square of 9 principles, using the cycle theory we have put it. What is the different cycles the square of 9 can give? So you can get a Gann square of 9 wheel also, but here we just simplified in terms of cycle. So where you should buy uptrend cycle, what is the downtrend cycle. So based on that we have just made it. And Gann angle and volatility, already we had that. So many are having that particular tool, and that also we have added in this tool. So this is the new tool which will be released shortly, and it will be given to the seminar participants free of cost. This is the only holy grail, and this is the only 100% things. And moreover, more than that, beyond that, it won't have any you can say failure on that. Don't think in that order. It has a specific degree of failure. I am just giving this particular study having a 60% to 70% accuracy. If you do for 6 counters, so though it maintains above that, whatever the things you have seen from the last month's webinar, if you compare, it is more than 70%. However, I will give an average rating of 60 to 70%. So lower side, if you are there, if you are getting higher, then we will be over satisfied. That is the reason I will be giving it lower side of approximation. The paid seminar is being scheduled for Chennai on 16th September and online 20th, 21st and 22nd September. But you need to register before to join it, and very few seats are remaining. Once it is filled, we may not allow the registrations also. Will be given this app. I told webinar participants will be given this time analysis app without any cost. It will be a free to them. This particular calculation for the September, the trend change dates for the Reliance we have calculated 9th, 24th and 26th of September. So the previous trend, the previous price trend will be the judgment factor on the trend change scenario. HDFC Bank, we have just calculated the 1st September, 27 and 30. Sun Pharma, we have just calculated 28th, 7th, these are the 2 dates. And TCS, we have calculated 1st, 12th and 30th September and 27th September also. Tata Steel, we have calculated 1st, 12th and 30th September. Nifty and Bank Nifty both having the Nifty and Bank Nifty both, we are just getting 14th September and 8th September. So these are the two dates we are getting for the September. So the price trend prior to that or the previous day of this can determine what kind of trend change it may give. At some time, also you need to remember this is 60 to 70% of accuracy or weightage I can give it to this particular study. And also the final and most important part of this particular time analysis is the day what is being calculated by us. If it is a holiday or a non-trading day, then the previous trading day or the next trading day will see the impact of trend change. So this is what I have told you, and I have also told this is being done using two formulas of the WD Gann. One is converting the numbers to degree. We have taken what is the price range, it's degree equivalent. How many calendar days between high and low, it's a degree conversion. How many trading days between high and low, and we have converted it to degree. After doing these conversions, we are just choosing the lowest degree. Out of these 3 degrees, which is the lowest, we are just converting, choosing that one, and based on that we are doing the calculation. So that is what we have done. So keep following this, and if the quality of this recording comes good, I review this particular video, and if you think it is a good concept, then do share with your friends. Thank you very much, and thank you for participating in this program.